Hi everyone, this is Tina Omrani. I'm a real estate agent with Royal LePage Signature. My background is in civil engineering and I have always had a passion for real estate and helping clients navigate the market with confidence. Today, I'm joined in the studio by Sarah Beuk. Sarah is the experienced mortgage broker with Dominion Lending, and we'll be talking about first-time home buyers, what they need to prepare, how the mortgage process works, and what programs or benefits may be available to them. Hi Sarah, thank you for joining me in the studio today. Would you like to introduce yourself and tell everyone a little bit about what you do?
So I'm Sarah Beuk and I'm a mortgage agent with Dominion Lending Center's Edge Financial, which is an independently owned and operated franchise part of the Dominion Lending Center's group of companies. So we are Canada's largest national brokerage, and we do have access to a multitude of different lenders and lending products. I've been a mortgage agent for the past 17 years, and my goal is to help homeowners realize their home ownership dreams.
Can you also explain to us what is the difference between a mortgage specialist at a bank and a mortgage agent like yourself?
Of course. So a mortgage specialist at a bank is limited to that bank's products, and often there are clients who don't fit into those certain guidelines, so they may not qualify for the bank's mortgages and they'll get turned away. Whereas a mortgage agent like myself has access to bank products as well as alternative lending products. So if a borrower doesn't fit in one box, we'll find a box where the borrower does fit.
Many first-time home buyers want to buy a home, but they don't always know where to start. From your side as a mortgage broker, what should buyers prepare first?
So the first step is usually getting a mortgage pre-approval, and we'll be looking at things like income, employment, down payment, credit score, any outstanding debts that a borrower has, and the overall affordability. And this helps the buyers clearly understand their budget before they start shopping.
That's great, thank you so much. So what benefits or programs are available for the first-time home buyers?
Yes, so there are some benefits and programs available, and they include things like savings in a first-time home savings account or the RRSP home buyers plan, which allows each borrower to save up to $100,000 of tax-free savings. There's also land transfer tax rebates. And in some cases, there's GST, HST rebates for new construction properties. Effective April 1st, you can receive up to $130,000 in that rebate. And there are also 30-year amortizations available now for borrowers with default insured mortgages, meaning they have less than 20% down payment.
So before someone even starts shopping for a condo or a house, what should first-time home buyers prepare?
So there are a few important things to prepare for. One of them is knowing your credit profile and reduce any debts that you have that you can manage to reduce. Save for the down payment and the closing costs using the first-time home savings account and the RRSP accounts because it's tax-free savings. Getting pre-approved early so that you can understand what monthly budget feels comfortable for you, which will make the preparation and the process feel much smoother and a lot less stressful.
I think a lot of buyers feel overwhelmed at first, but once they understand the process and their numbers, it becomes much more manageable.
Absolutely. The earlier buyers speak with a mortgage broker and a realtor, the more prepared and confident they'll feel going into the process.
Sarah, one of the biggest questions buyers always ask is about mortgage rates. We hear terms like fixed, variable, insured, uninsured mortgage rates, and it can get confusing very quickly. Can you break it down for us?
Of course. So there are two main types of mortgage rates. There are, first of all, fixed rate mortgages, which come with stable, predictable payments that stay the same throughout the term. And then there are variable rate mortgages, which will fluctuate every time prime rate changes. So your interest rate can go up or it can go down, depending on that rate change. So technically, that means that it's a more volatile market. If you can't handle rate increases, then a variable rate is not the mortgage for you. The other types of mortgages are insured and uninsurable mortgages. So insured mortgage means that the borrower has less than 20% down payment. They are required to have mortgage default insurance, which does come at a cost to the borrower and it is added into the mortgage. But it also gives the borrower access to the lowest interest rates on the market. And then there are uninsured mortgages, which mean that each borrower has more than 20% down payment. They do not have to pay an insurance premium, but they want access to a 30-year amortization, which is available to anyone who will take an uninsured mortgage. The problem with uninsured mortgages is that they do come at higher interest rates. But again, it does make more sense for some borrowers. It depends on their financial situation, comfort level, and their long-term financial goals.
So it really depends on the buyer's comfort level and financial situation.
Some buyers prefer stability and predictable payments, and others are more comfortable with market fluctuations.
What's the current range of mortgage rates buyers are seeing right now?
So mortgage rates will depend on the type of mortgage, being fixed or variable, as well as insured and uninsured. But on the lower end, variable rates where they're insured are sitting at around 3.6% right now and can be as high as 4.2, 4.3% for the uninsured mortgages. And fixed rates are sitting at around 4.29%, and I'm specifically referring to 5-year fixed rates because those are typically the lowest rate prices, and as high as 4.89% for uninsured mortgages. This is why getting properly pre-approved is so important, because the rate and product available can look very different from one buyer to another.
What are some of the biggest factors that impact someone's mortgage rate?
So there are several important factors that determine what interest rate a borrower can get. One of them is credit score. Obviously, an excellent credit score will qualify you for the lower interest rates. The size of the down payment and the purchase price of the home are a major factor as well. So any property that is valued over $1.5 million is not insurable, so it will not qualify for the lowest rates, as well as your income and debt ratio. So if your income is stable and consistent, salaried income, then obviously you're going to qualify for better interest rates. But if you're someone who's self-employed that maybe doesn't show as much income as you earn, you may not qualify for the lowest rates, but there are options with other lending products for sure. So it really does depend on the overall profile of the borrower and the property that is being purchased.
That's really helpful information. I think a lot of buyers focus on only the rate itself, but there are many factors behind it.
Exactly. The lowest rate doesn't always mean the best mortgage either. It's really important to look at flexibility options like penalties, the term of the mortgage, if it's transferable to another property, and really what fits your long-term financial goals.
So Sarah, one interesting trend we're seeing in the GTA market right now is affordability-focused buying. According to the GTA Monthly Housing Report and Urbanation Report, condo sales under $500,000 were more than doubled compared to last year. And about 62% of all condos sold in March 2026 were under $600,000. I think a lot of buyers are now asking, can I actually afford to buy? So let's talk about a realistic example. How much income does someone approximately need to qualify for a $500,000 condo?
So every situation is different depending on the property taxes, the heat, and maintenance fees for each specific property. But generally, assuming someone has little to no debt, they would probably need around $110,000 of annual income.
That's actually more achievable than many people think, especially for dual income households or young professionals entering the market. What about down payment? How much would someone typically need?
For a $500,000 purchase price, the minimum down payment is 5%. However, if the property is valued above $500,000, then it would be 10% on the difference. So as an example, a $600,000 purchase price would require $35,000 down payment, which would be 10% of $100,000 plus the initial $25,000 on the first $500,000.
So what about the closing cost? How much would a buyer need to save for the closing costs?
So I'm glad you asked that question. So closing costs are not part of the down payment. They are separate. And typically, I tell borrowers to have at least 1.5% of the purchase price in additional savings. That is what the lender requires to verify closing costs, but that amount can be different, can be more, can be less. But typically, let's say the borrower is buying a property between $500,000 and $600,000, I would recommend to them to have at least $10,000 of additional savings to cover closing costs if they are a first-time home buyer.
That's great. Thank you, Sarah, for sharing that information. And what would monthly payments approximately look like for a condo in that range?
So If we're assuming the condo is a $500,000 purchase price with a 5% down payment, depending on, of course, what the property taxes and maintenance fees will cost for that unit, you'd probably be looking at anywhere from $3,000 to $3,500 on average per month. But that's money you're investing in yourself, in your own property, and not money that you're giving to a landlord to pay their mortgage off for them.
Exactly. Yeah. So instead of paying someone else's mortgage, your landlord, you're paying for yourself and you're adding equity and saving for your retirement.
Absolutely.
Thank you so much, Sarah, for joining me today and sharing all of this helpful information. If you're a first-time home buyer and have questions about buying, financing, or preparing for the market, feel free to reach out to either of us. We'd be happy to help you and guide you through the process. Sarah, before we end, is there anything else that you would like to add?
Thank you everyone for watching. And if anyone is interested in reviewing some numbers based on their specific situation, there is an amazing app that is available that I'd be happy to share with you. So please reach out and I will send you the link for that download. Thanks again, everyone, for watching, and we'll see you in the next video.